Hey everybody, Smart Silver Stacker here. Hope you're doing well. We need to talk because we are being set up for an economic crisis, for a crash, the likes of which doesn't exist in living memory. In fact, the likes of which the world may never have seen before. And when I say we're being set up for a crash, I don't just mean the stock market, right? I don't just mean uh, housing. I don't just mean any of these individual assets. What I'm talking about is a collapse of the entire financial system, the entire uh, economy, an economic collapse that will have far reaching consequences, far worse than any of the crises we have witnessed thus far. And when I say we're being set up, it's hard to believe as you watch this play out that this isn't, at least in some way, shape, or form, intentional on the part of the political elites, the central bankers, the people pulling the strings here. I'll give you some evidence that this is coming as we go through this video, but I want to start off with this. This was Jerome Powell today giving testimony before the Senate banking panel. And if you watched this testimony, which is admittedly kind of painful to watch at times, it does convince me that this is, at least to some extent, intentional, because the political elites, the senators doing the questioning here, I mean, this is the Senate banking panel, and one would presume that the people in this position have at least some understanding of the economy, of finance, of the banking system, of inflation. And yet, when you listen to the questions they ask and the way that they point fingers at economic boogeymen, it becomes clear that either one of two things is true, and that is that either they're just completely ignorant of all of those factors that I just mentioned, or they willfully ignore the causes of the economic malaise, the problems that we are witnessing. I mean, in this questioning, let's just take inflation as one example. I heard many potential causes of inflation pointed out in this questioning of Jerome Powell. And in this testimony, we heard illegal immigration pointed out as a cause. We heard Joe Biden himself pointed out as the cause of inflation. We heard about supply shocks. We heard about corporate greed and the greedy businesses that are driving up prices and causing inflation. And yet, not once did I hear a single mention of the real underlying cause of inflation. And, that's not too hard to figure out what is causing inflation, right? We've got government running $2 trillion deficits annually. You have an enormous amount of US debt that has still been monetized by the Federal Reserve, sitting on the Federal Reserve's balance sheet. And yet, not once was any mention of this made. So it's clear that these politicians, again, are either just clueless, or the only thing that they care about is getting elected and, what their constituents hear them asking about. And of course, all of them are in, one shape or form, or to some degree, complicit with the inflation crisis, which we are in the midst of, and which is about to get much worse. Now, of course, inflation is a term that has been obfuscated quite a bit by the powers that be. And one way that you know the truth about inflation has been obfuscated is the definition has changed. If you look it up in a modern dictionary, you're going to see a rise in prices is what the definition of inflation is. But if you go back to a dictionary from 1971, you can see the real definition, in my opinion, the more accurate and really more useful definition of inflation is this. It's the act of inflating, or the state of being inflated, or more importantly here, a sharp increase in the amount of money and credit causing advances in the price level. Now, this makes sense when you think about the tools that the Federal Reserve has at its disposal to fight inflation, namely raising interest rates. This is the primary tool that they have utilized thus far in their supposed fight to bring inflation back down. And that is that they raise interest rates, and that should presumably tighten up the amount of credit being issued, right? Higher interest rates, higher cost of money means that there should be less borrowing. But the problem is that thus far, despite the fact that the Fed's interest rate hikes have nearly brought the economy to its knees, and we're going to talk about that in just a moment, it's really done very little to decrease the expansion of the credit supply. According to recent data released by the Federal Reserve, credit card debt is on the rise, hitting record totals among consumers. So the Fed has cranked up interest rates, and yet we still see Americans running up the credit cards. Now, this is largely due to inflation that consumers are put under this pressure, and yet they are still able to borrow. And now Americans owe $5 trillion in total consumer debt. That doesn't factor in mortgages. If you factor in mortgages, consumer debt stands at $17.5 trillion. So, despite the fact, again, that the Fed has raised rates, it really hasn't done much to put a damper on the borrowing, right? So this is not high enough to fight inflation. And yet all they talked about during the testimony today, and all we really hear discussed at the FOMC meetings and with the Federal Reserve is all just when is the Fed going to cut rates? Whereas really, if you just look at what's occurring with the credit supply, more borrowing is occurring. It's highly inflationary. And it's not just at the consumer level. You've got the CBO recently revising their forecast upward by 27% for this year's deficit to nearly $2 trillion. So, the Fed, they haven't raised rates high enough to fight inflation. And yet they're already talking about cutting. Now, why are they doing that? Well, because the whole system is on the verge of collapse. But what I think is happening here is that we are being set up for an economic crisis, a huge economic implosion. And why do the elites like that? Why would they steer us in that direction? Well, it's because they never let a crisis go to waste, right? When the economy really begins to implode, that is when the Federal Reserve and the politicians will be given carte blanche to do whatever they want, right? That is when they'll really be able to ramp up the printing presses. They can't do it now. They can't just ease right now, despite the fact that the economy desperately needs it. Not that it's going to fix any of the systemic problems. I mean, ultimately, the real problem is that they've been easing into these economic downturns for so long now that if we actually allow a recession to come in and clear out the bad debt and the zombie corporations, that the pain is going to be so intense that there's no way it's politically viable. And yet we have this huge inflation problem. I mean, the inflation numbers we know understate the real problem. If you go to the grocery store, you just don't believe your lying eyes, right? I mean, they tell you inflation is what, 3 point something percent, but we all know that it's much higher than that. And yet that's the reason that they can't ease right now, because it is understood, at least on some level by the public, that inflation is a huge problem. And yet, there were members on this Senate Banking Committee that were implying that the Federal Reserve needs to hurry up and cut, right? Because the job market is beginning to suffer, and it's going to get much worse than it is now before it gets any better. In fact, the real problem is that we need a massive recession, right, at this point, because the can has been kicked down the road so far. But we're not going to get that. What we're going to get is some kind of an economic crisis, which is right around the corner, if you ask me. I mean, I can't tell you an exact date. It's just the evidence is beginning to pile up that things are looking pretty ugly. And again, we'll get into more evidence as we go along here. But what are markets doing? Well, today we had another all-time record high in the Nasdaq, right? The S&P 500 also hitting new all-time record highs, and that is because investors know that more easy money is coming on the heels of the next economic crisis. And this is exactly the game plan of the Federal Reserve and the political elites. Is they want to get a crisis. That's why we're being set up, so that they can print huge amounts of money, inflate asset values to new all-time record highs. I mean, these markets are going much higher because that is part of the huge wealth transfer, right? Inflation and money printing does nothing to benefit the poor and the middle class. It's all about inflating the asset valuations of the assets that are held by the very rich. And in fact, a lot of the very wealthy, they borrow money they buy these assets up. Inflation is exactly what they want. It erodes the value of their debt because the debt can be paid back in devalued currency. And then the asset valuation that they bought with the debt, those assets become valued at a higher level. And we're seeing that in the stock markets right now. And just remember that in Venezuela, when they went through their hyperinflation, they had a huge boom in their stock market. Stock valuations in Venezuela went through the roof during their hyperinflation. So higher stock markets, eh, that's not an indication, despite what the politicians tell you, that the economy is in good shape. The markets and the economy are two different things. And we are going to continue seeing higher valuations for these paper assets, I believe. I mean, sure, there'll be volatility. Maybe there'll be some buying opportunities. I don't know. But I think for now, because investors understand that there's going to be a lot of money printed and a lot of money creation around the corner, those assets are going to go much higher. Really, gold and silver, to me, physical metal, this is one of the best safe haven assets, one of the best insurance policies you can take out against the lunacy that we are witnessing in the economy. And when the money really begins to be printed and devalued, you want to have some of this stuff. This will be an important thing to hold throughout the next economic crisis. We'll take a look at the silver chart here in a moment. But if you want to get some gold or silver, make sure you check out today's video sponsor, sdbullion.com. They got some great deals right now. You can get piece silver dollars, just like this one, for $26.99 right now, any quantity. That's a great deal if you ask me on silver dollars. It seems like the premiums as the spot price on silver on some of these old 90% coins have really come down quite a bit. And I think right now also there's a lot of selling pressure in the physical market because stackers, some stackers out there are under just as much pressure as the rest of us from inflation. They're having to lighten up on some of these assets. I mean, the price of silver has done pretty well so far year to date. And I think a lot of folks who have been sitting on physical metal are taking advantage of that, selling into the market. But when it becomes clear how bad the economy really is and how deep this crisis is going to get, that's going to change, if you ask me. Take a look at the silver chart here real quick, and then we'll get on to some more news about just how bad this crisis is likely to become. But you can see silver, if you ask me, this is a great entry point right now. We have got silver breaking out of this bull flag pattern that we had talked about forming there in a consolidation for some time. Still, the long-term uptrend here from its breakout above $26 back in, when was that? Back in late April, early May. Got this breakout here still intact. So we're still in an uptrend. We're in a little bit of a consolidation from this breakout right now. Really a great entry point, if you ask me. Also, from a technical standpoint, we just had a bullish cross on the MACD coinciding with this breakout from this bull flag. So I think it's even in the short term here, much higher for gold and silver moving forward. And that's pretty clear when you consider how much money is going to be printed. I mean, it's pretty obvious why those metals are going to be rising. So, Powell was asked about the banking sector at some point during this testimony in front of the Senate Banking Committee. And he said that, the banking system is good. It's well capitalized, no problem. Of course, that does fly in the face of the recent study from Florida Atlantic University, which tells us that 67 banks are currently at the risk of collapse due to commercial real estate exposure. This is just one aspect of the coming economic crisis, which is likely to be very serious indeed. The study conducted at Florida Atlantic University tells us that 67 of the largest U.S. banks have commercial real estate loans exceeding 300% of their total equity capital. And this is another reason why the Federal Reserve is going to absolutely have to cut rates. But I think they are waiting for a crisis to do so. And, as far as a banking crisis goes, one of the things that really could bail the banks out is interest rate cuts across the board. That is because of their losses on assets like their commercial real estate loans. The value of these properties that are associated with these loans have plummeted because of higher interest rates. It means that mortgage rates have gone up. The number of buyers who can afford to go into these properties is declining. And the valuations that they were at when these loans were originated were pumped up, goosed up by low interest rates, artificially low interest rates. And now We're beginning to reap the consequences of that. This is an example of how, you kick the can down the road, but you don't solve any problems. You just create more problems and worse problems down the road. Well, now we're at the stage where those problems are becoming very serious. According to the FDIC, because of these assets, which are declining in value because of high interest rates, not just the commercial real estate loans, by the way, it's also the US Treasuries that they're sitting on, that unrealized losses on available for sale and held to maturity securities has now increased to $517 billion in Q1 of 2024. So almost certainly those losses are even higher now. And again, this is from the FDIC quarterly banking profile of the first quarter of 2024. So this is not, from any source other than the official source itself. Also, we have got rising delinquencies on debt. So who is holding all of these credit card loans? Who is holding auto loans? Well, it's the banks. And according to the Federal Reserve's data, in the first quarter of 2024, credit card and auto loan transition rates into serious delinquency continued to rise across all age groups. This is at the same time that total consumer debt is increasing to record highs, $17.69 trillion. So you can see that the Federal Reserve, they need to hike interest rates more in order to fight inflation, as we established, because in order to fight inflation, by raising rates, you have to diminish the amount of borrowing going on. But that's not what has happened at all. Across all sectors, borrowing is still exploding. So the Federal Reserve, they really wanted to fight inflation. They've got to hike higher than they already have. And yet nobody is talking about Fed rate hikes. And that is because they are going to favor inflation. That's their job. Inflate things, right? That is why the Federal Reserve exists. I mean, this is not speculation or, me telling you what the Federal Reserve plans to do. Just look at the historical evidence. Since the creation of the Federal Reserve in 1913, the dollar has lost 98% of its purchasing power. And over the past 4 years, it's lost 25% of its purchasing power in that short period of time. So, that last 2%, they're going to get it. They're going to come and get that last 2% of the purchasing power of the dollar. You know it. Another sign that the U.S. economy is absolutely toast, despite the fact that Powell tells us the U.S. economy is strong, the political elites tell us it's one of the best economies ever. We've got the American Bankruptcy Institute now telling us that U.S. business bankruptcies are up 40% since January of 2023. Small businesses up 60%. And this is part of the plan, too. It is to crush small businesses. This is why they like crises, right? Because you create an economic crisis, it smashes the small businesses, absolutely destroys them. It allows the big businesses who benefit from the bailouts and the emergency interventions on the part of the central banks, that they benefit from it. They can then come in and buy up the assets of small businesses for pennies on the dollar. And, I think that is part of the agenda here as well, is to destroy small business, make the American people more beholden to government. I mean, they want you on the dole, right? They don't want you out there running a prosperous business, making your own money. They want you to be dependent on them for, your basic necessities. I wouldn't be surprised if, when we see this crisis play out, we see talk of a universal basic income. We see talk of, more stimulus checks, which of course everybody on both sides of the aisle is going to absolutely clamor for. They won't call it socialism, of course. Those on the right will say, well, it's absolutely necessary. It's always necessary, right? But that is what's coming, right? The left obviously always wants to send checks to people, but they need a crisis to get everybody on board. But nobody's going to turn down the free money. And look, I don't blame people for taking the free money. I took the stimulus checks. I didn't have a choice. It just got deposited into my account. But if stimulus is coming, you've got to accept it, right? It's the smart thing to do. You can't say, no, don't don't give me the stimulus, because I mean, then you're really doubly getting screwed, because you're going to feel the inflationary effect and the economic downturn as a result of passing out all this free money, but you don't get any of the free money. So I get it on an individual level, but from a systemic standpoint, this is a huge problem. And none of the questioning and none of the thought process on the part of Powell or these Senate Banking Committee members really takes into account the geopolitical situation that we find ourselves in, where there's a huge risk of the U.S. no longer being able to treat the rest of the world like, its piggy bank, and being able to send all this debt around the world and get currency, get dollars, get real goods. We've had an explosion in the U.S. Trade deficit recently, and the fact that we are living so far beyond our means, that's going to come to an end with this next crisis. And also, there's the real risk. You've got Japan facing an economic crisis. They may need to sell their treasury holdings to support their currency. They are the biggest holder of U.S. treasuries. You have got China, who has been actively dumping U.S. treasuries for years now. And yeah, Krusty White Bread in the chat says immediately buy metals with any stimmy money they send you. 100%. I believe that's what I did with my stimulus checks. I think I bought some silver, if I remember correctly. But yeah, that's a good use of any stimulus money. Not financial advice, of course, but if they're sending out stimulus, that's going to be good for the metals. But as far as the international arena, we've also got China with a huge amount of debt. Now, also, I want to draw your attention to Saudi Arabia, who holds $135 billion worth of U.S. treasuries, likely a result of the petrodollar recycling into the U.S. debt. But look at this. This is from Bloomberg from today. Saudis warned G7 over Russian seizures with debt sale threat. This is pretty incredible. So Saudi Arabia was not too pleased with the proposed confiscation of Russian assets by the G7. Russia has about $300 billion worth of frozen assets in these G7 nations' banking systems that have been frozen. And recently they were contemplating seizing that. Oh, do me a favor, by the way, if you're watching this, you're enjoying this content, now smash that like button. We've got 172 people in the live stream right now, only 62 likes. If you think this information is worth sharing, help it get into the algorithm, smash that like button, subscribe to the channel if you haven't done that yet. It's the best way to help spread this information. But anyway, what were they threatening, though? How did Saudi Arabia try to put pressure on G7 nations to not seize these assets? And what they threatened to do was to dump debt. Specifically, they mentioned French debt, that they would sell some of their French debt holdings. But this is very interesting that the Saudis are now talking about weaponizing their debt holdings as a result of this geopolitical conflict that we're watching. And of course, Saudi Arabia, a member of the BRICS nations now, it's a little bit of a nuanced situation there. I mean, they depend on U.S. military support and U.S. weapons, but that could change. And they're willing to threaten to dump debt. I mean, they say it's kind of a veiled threat here, but this is something we should all be keenly aware of, is that the nations who hold foreign powers' debt, I mean, they're really in the driver's seat here in a fashion, because, I mean, think about it. If Japan decided to dump debt, not that Japan is doing it for geopolitical reasons, they're doing it for economic reasons, but let's say China, Saudi Arabia, Hong Kong collectively hold over $1 trillion worth of U.S. treasuries. That's going to be a real problem if they decide to threaten that. DS Cam says, been hearing this for 16 years, never going to happen. Well, look, to be fair, the financial crisis, which we are staring down right now, it's been in the works for a lot longer than 16 years. It's been in the works since, at least, I would say, 1971. I mean, really, if you want to go back, it's been in the works since 1913, since we got the central bank, the Federal Reserve. But since 1971, when dollar convertibility into gold was ended, that's when I think we were set up for this. And think about this. I mean, gold was $35 an ounce back then. Now it's over $2,300. You may think that, because nothing like this has happened over 16 years, I mean, it's kind of an arbitrary time frame that he brings up in the comments there, that nothing bad can happen. I mean, that is a serious case of normalcy bias, I am afraid. And just because there hasn't been an economic crisis for 16 years, although, I mean, really, there has been a huge crisis since over the past 16 years. You had the great financial crisis, you had the COVID pandemic crisis, you've got over $7 trillion worth of US Treasuries that have been directly monetized by the Federal Reserve. And yeah, I mean, you might think it's funny to say stuff like the end is near again, but look, for those of us who have been warning about the coming economic crisis, which, if you understand anything about economics, you understand that $35 trillion in debt is unsustainable and $2 trillion deficits is unsustainable. And just because the system hasn't collapsed yet, it's not evidence that it's not going to collapse, right? I mean, every economic calamity that has ever happened didn't happen until it happened, right? I mean, that is not normalcy, I'm afraid. Um, but look, you don't have to get prepared. You can bury your head in the sand. You can say everything's going to be fine as we borrow $2 trillion a year just to keep the wheels running on this, house of cards, just to keep it going a little bit longer. But if you understand that that's not sustainable and that we've got over $200 trillion in unfunded liabilities, we're on the verge of significant global warfare, and the US ability to export debt around the world is likely coming to an end, then you probably want to get prepared, right? If you understand the implications of the situation we find ourselves in, one of the ways to do that, of course, is to get into hard assets. But also, I think just psychologically girding yourself for the kind of economic turmoil which is coming. You get some physical assets, you get squared away, you try to get out of debt, you have some emergency fiat currency, focus on making yourself independent of systems of support. And then you really don't need to worry about this stuff because, look, the world's not ending just because there's an economic crisis coming. But there will be a lot of opportunities for those of us who have taken the time to get prepared and get our economic house in order ahead of time. And you've got to understand that, there's going to be a lot of money created. There's going to be a lot of finger pointing. The real causes of what is coming will not be advertised. But again, if you understand what we're about to experience and where the economy is headed, then there is still time to get prepared. And look, I mean, gold, silver, platinum, this stuff is on sale right now, if you ask me. Other assets, crude oil, I think, is still a huge opportunity. Cryptocurrency has had a significant pullback. That may not be done. I mean, you look at the chart of Bitcoin from a technical standpoint, may still have a little bit of a way to go, but I think all of these assets that are alternatives to the dying fiat system, these are all going to be places to be, and you're going to sleep better at night when gold and silver are soaring. When you have a little bit of this stuff, and it might not even be paper gold and silver. I don't know exactly how this is going to play out. I mean, it might be the physical only. I mean, if you look at the markets, you know that hundreds of ounces of paper metal get traded in both gold and silver for every single ounce of underlying metal. And so to me, it does make sense to have some physical on hand and, take what other steps you think you might need to get prepared, right? Get yourself the food, water, electrical, medical, all the basics. Try to consider what can occur in an economic crisis. I mean, you can look at examples like Venezuela and Argentina and other places where there have been economic crises. And it's not like, life doesn't carry on, but it can become a lot more difficult in a lot of ways. And so you got to get prepared for that. But anyway, thanks for watching, everybody. Don't forget to smash that like button. Leave a comment down below to let me know what you think about all these things. And stay safe and happy stacking, everybody. I will catch you next time. Smart Silver Stacker, out.